Hello, everybody. Kirk Spano, along with Scott Shooter Henderson and Teresa. I just went to Italy and France May. It is January 8th, 2025. Wow, I keep wanting to say 2024. In any case, we are going to do some macro, talk about the services a little bit, get into some ETFs, some different charts that I have from Shooter, talk to Teresa about some of her perspectives, and try to fly through this all in 1 hour and answer your questions. If you have any questions, put them into the Q&A. Should be in your toolbar. I have a poll up, actually 3 questions. How many books do you read per year? Looks like about 1/3 of you are well read. Do you have a Seeking Alpha premium membership? About 50, almost 50-50. Not quite. You should, and I'm going to show you why. And then what is your proportion of ETFs to stonks? We have most people pretty heavy in stocks. So that's in line with the way I do it. So we don't have anybody who's mostly ETFs, only a couple people who are about 3/4 ETFs, and everybody else is 50% or more stocks, with some people at half the room actually at about 80% of your portfolio in stocks. I'm going to talk a little bit about that. QQQ is something that should really be something that you use. So I am writing the punch card growth stocks right now for 2025. This list will hold through most of the year, and I have a very simple philosophy on the stock list this year. I am upgrading them. What I am doing is I'm throwing out all the stuff that hasn't performed. I have a few that I'm adding that have been good performers. And here's what I can tell you. This is the truest thing you will ever hear in investing. After a correction, the things that were doing the best tend to do the best again. So you don't really have to go out and hunt for a whole new slew of new ideas. There'll be a few that you want to put in there, a few things to get cheap that weren't cheap before. But for the most part, if you missed on buying the winners from 2023 and 2024, if we get a correction in 25 or 26, which I think is likely, and I'm going to show you why, then you probably just add things that you didn't have before that did really well in 2023 and 2024. Now, I am breaking this list up into different categories. Profitable companies isn't that novel. And then we have pre-profit companies. Some of them are up a lot already. Some of them just started going up a lot. And then turnarounds. And I preface turnarounds with turnarounds seldom turn. So there will not be many of these. But the ones that I'm getting into, I'm pretty high conviction on. Flagstar, I just can't see how it loses at all. It's just a question of how much does it win. Warner Brothers at these prices, I can't see how it loses either. Again, just how much does it win? It could chop along forever. The whole notion of margin of safety is that you're getting a low enough price that you don't have a lot of downside. And that's what you're getting with Warner Brothers, Discovery, and Flagstar. They just really don't have downside. Now, will they have upside? That's harder to know, but they really don't have much downside. So I'm putting this together. It'll be out over the weekend with some quick takes. And then from week to week, there'll be Kirk's Takes, where I do some charts and about an 800-word article, a shorter article that talks about why I'm in the stock, what's different about it, and how to get in, how to get out, that sort of thing. I will do an occasional deep dive. I don't do a lot of them because it ends up being a lot of regurgitation. So in the quick takes, the Kirk's Takes, you're going to get links to the investor page and some other things that I'm reading. I'm not going to read it to you. You click and go read it yourself. And I'll tell you why I think it's important, though. And that's really, I think, the difference between what I'm doing and what most of everybody else on Seeking Alpha and everything else out there is doing. Almost everybody out there is regurgitating and just following the crowd. We have done very well by figuring out where the crowd is wrong, which is really a lot of places, but finding the things that the crowd are going to want later. And that's the trick. We can find lots of undervalued stocks. However, sometimes undervalued stocks stay undervalued a very, very, very long time because they never capture investor imagination. So even if their earnings go up and up and up and up, the stock barely keeps up. Why? It doesn't excite, especially the millennials. It doesn't excite the millennials. It used to be the boomers. Now, if it doesn't excite the millennials at a certain level, it may never be a great investment from the standpoint of stock appreciation. There are certain things that the millennials have traded, energy being one of them. In 2021, energy was a huge trade, huge trade. I mean, I think it doubled. So I think there is in the millennial consciousness, and remember, I've said the millennial money is the money at the margins. And so that makes it the most important money in the market. Even though it's not the most money, it's the money that's moving. And that's what pushes prices up or down. So if the millennials will run in a certain direction at some point, and we can get in before they run in that direction, they'll just carry us all the way up. One of the best pieces of advice I ever got was from my grandfather. He asked what I wanted to do with my life. I think it was a freshman or sophomore in college. I said, I don't know. I said, I'm at the moment, I'm an applied math and physics major. You know how that good. I met a bunch of kids who were way smarter than me, and I got discouraged. So I started doing other things, right? In 1990, taking calculus, might have been 91, I got a test score that I thought would have been a B, maybe an A minus, and it was a C plus. And I asked the professor, I said, why is this such a low grade? He said, I put it on a curve. And I said, you mean to tell me that virtually everybody in this class got a better score than me? And he said, yeah. I was like, holy cow. And what hit me is when The Matrix came out about a decade later. At the end of that movie, if you remember, Neo, the star, starts picking bullets out of the air because he can see the code, right? In the movie, everything is in computer world, and he can see the bullets coming because they're just ones and zeros, right? They're the bullets. He picks them out of the ground. I realized back in college that there's people like that, and I wasn't one of them. So I'm overqualified mathematically. At least I was. In the early 2000s, I was a quant, and I was overqualified with my math skills. Today, I don't think so. And there's so many brains from math and science and finance now that they're trying to outtrade you with their quantitative machines. And for us, we have to avoid really going head to head with them. We can piggyback them. I mean, that's part of trend trading. If you can get on a trend that you know the machines are pushing, Shooter talks about this all the time, then go ahead and ride that trend. I like the pivot points. I'm very Paul Tudor Jones in that approach. Paul Tudor Jones is the founder, not of Robinhood, the company, but the Robinhood Foundation. He made so much money trading in the 80s and 90s that he was one of the first billionaires from trading, big hedge fund guy. So Paul Tudor Jones said, look, I don't make a lot of money in the middle of the market, but I catch the pivot points and I make a ton of money from time to time. And when you hear me talk about the middle of the market and avoiding it, I mean avoiding it from the standpoint of trying to catch the changes of direction in the middle. When you're in the middle of the market, ride the trend. When you think you're near the end of a market, either the high point or the low point, flip the switch. So that's kind of the basic premise of how I invest is if we're in a strong trending market and it's just chopping its way up, just ride it. Don't try to get too cute. But if you think it's overvalued and there are catalysts coming to push it down, or if you think that the correction that just happened, if there's been a correction, is overdone and you have central banks coming to the rescue, then just buy it. You don't have to be perfect. If you're close, you'll get excellent results. So that is how I look at the world. And this year, you read my outlook. I think it's going to be a choppy year. I think we end up in about the same place as we started, maybe a little higher, maybe a little lower. Although historically, if it's not a double-digit up year, it's probably a single-digit down year. That is historically how it goes. There are not many single-digit up years. So if you take a look at the skew of the years that were down 0 to 10%, up 0 to 10%, up 10 to 20, down 10 to 20, down over 20, down up over 20. The up single digits is, I believe, kind of out of whack. So, we're more likely to have a down single digit year than an up single digit year. Although the plus 20 years, there's quite a few of those. We just had back to back. The odds of getting 3 in a row are slim. I believe it's happened twice. So it could happen, but probably not. So either things hold on, we get another puff on the cigar, we get a 10-15% up here, or what I think is we get a single percentage down here. We'll see. If liquidity gets super tight, things could get super bad, and I'll get to that in just a second. So punch card growth stocks and punch card dividend stocks are coming. I am updating the very short list. Still working on this spreadsheet. I'm finding some errors, but I'm going to let you compare the ETFs. And what you're going to find is how do certain ETFs compare to the S&P 500. Again, this 5th year column is wrong, but you can see not a lot of ETFs beat the S&P 500. The ones that do are QQQ. QQQ beats the S&P 500, and then momentum. Momentum beats the S&P 500. The mid-cap momentum also beats the S&P 500. Why is that? Essentially, the momentum ETFs are stripping out the ones that are just going in the wrong direction. They're stripping out the stocks that are going in the wrong direction. So if your goal is just to beat the S&P 500 by a little bit, there's all you got to do is buy QQQ, SPMO, and XMMO into the allocation that you want, and that's probably going to beat the S&P 500 over virtually every time frame. Not by a ton, but it'll beat, and your risk will be about the same. So if your benchmark really is the S&P 500, maybe you're a FIRE investor, stop using SPY and VOO. There's better alternatives, and you can set it and forget those too, and you'll beat the index by a little bit. Now, if you go over to the tactical side, and I haven't completely built this out yet, again, the 5 years wrong. We are looking for funds that beat the index, and some of them beat the index over different time frames. And that's what you have to find is, okay, if it's going to beat the index over a certain time frame, how can we benefit from that? So IBIT doesn't have a history yet, but we can figure out based on valuations, which we can find here at Finbox. I'm using Finbox, but there's 100 websites out there you can use. And we can figure out, okay, how do we beat the indexes with a little bit less risk? If you want, and that's why I asked in the poll, how many of you are using mostly ETFs? I know that people aren't. However, you probably are in your 401k. So if you're investing in a 401k, and I offer one to small companies and mid-sized companies that has ETFs instead of mutual funds, and we're crushing it. I mean, it's just easy to beat the index with less risk. And if you don't want to take all the risk of an index, you can have a better risk-adjusted return by maybe approaching the return of the index, but with a lot less risk, which is where I am right now. Right now, I'm very, very conservative in the ETF and 401k portfolios. So I'm going to finish this up. I've got a little bit of coding left to do, and I think this will be a pretty good tool. Mega cap, very short list. The dividends, there's an error in here somewhere. Again, I got to fix it yet. And then I've added some growth stocks. So there's about 6 new growth stocks in the growth VSL, the growth very short list. VSL is our watch list. So you'll have this all in the next couple of weeks. I have to update the bottom fishing prices and then the 5-year price potential. So I don't know that I believe that one's going to get to where I thought last year. So I'll update all of these. What I do is I take a composite of analyst estimates. I look at the low end and the high end and the trend. And then I apply my own analysis. And I'm usually closer to the low end on things that aren't on the VSL, but the things that get put on the VSL are usually towards the high end of the analyst range. And sometimes, you can make a lot of money. Like, who knows if this will happen? But weirdly, AMC, just like Warner Brothers Discovery, probably is going to make money. AST Space Mobile, this used to say 1,500% or something, right? But we've eaten up a lot of that gain because the stock's gone up so much. So you take a look at some of these. What are the potential gains? They're not all updated yet, but just by virtue of keeping track of this year to year, we get a pretty good idea. So, all right. Seeking Alpha Premium, I asked about. If you don't have it, you should, because all of these ratings they have are just an incredibly good shortcut for you to get a look. I mean, this page right here, you can see United Airlines Valuation is all right. Growth is pretty good. Profitability is pretty good. Momentum on the stock is good. Revisions. Now, what can I tell you about this? I don't like that the momentum is A because I'm not in it, right? So I would rather see growth, profitability, and revisions all AB, and the valuation at A, put the momentum at like C. So AB, 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 C or D, AB. Why would I want the momentum to be a C or D right now? I think it's a pretty easy answer. It means the price hasn't moved up yet, right? All these other grades were AB way back here, and I didn't buy it. Do I want to buy it here or do I want to buy it here, right? So you're not necessarily looking for a great momentum grade unless you're a swing trader. Swing trader, you can get on and ride it a little bit, but once the momentum gets to be A, you're probably closing in on a correction. So I'm looking for green, 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 yellow, green. That's the pattern that I look for. And there's a lot that you can do. If you have it, you just go to top stocks or screener. And I've built some of my own screeners with my own ratings. They give you a bunch of screeners, really, top healthcare stocks. You take a look at it. I would rate it by revisions. Why revision? Remember Zacks? Zacks was all based on revisions. If the analysts started upgrading and upgrading and upgrading, the stock would usually follow. So I'm looking for stocks that are getting upgrades where these three ratings can catch up. So just eyeballing this, where is a company with green, green, yellow, green? Or even red. This one, what's this? AVTX. Green, 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 red, green. Everything's good about this company, but nobody knows who it is. I don't even know who it is. Who is AVTX? Avalo Therapeutics. Now, it's biotech, it sounds like, so it's probably risky. But if they're making money, right? Clinical stage biotech, that's high risk. So I probably don't want that. But if you find that pattern, green, 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 red or yellow, green, you're probably going to find something pretty interesting. This one, profitability. The profitability isn't there yet. We don't know about the growth. I'm not going to bother looking at it, but it's something that you probably want to glance at. Growth is too low for me. You could also just rate it by this. Growth stocks tend to do the best. That's been true for over 25 years now, or about 25 years now. Growth. See here. This one, what's this? It's not profitable yet, but it's growing. What do these guys do? That's not a sexy chart unless they're about to turn it around. What do they do? Another clinical stage biotech. Yeah, you're going to find some of those. So what I've done with my screens is I've adjusted them, right? So my top rated mid-cap stocks, 14 of them only. And there you go. Look, here's the pattern. There you go. AB, I don't know who they are. RNG, Lyft, interesting. So there's a bunch of companies here that I've been looking at. Skyworks, AB, I just glanced at the other day. I'm not super interested in the asset managers. Remember, we had the investment in Invesco for a while. I don't know that there's a lot of those opportunities out there unless you see M&A on the way. But if you are a dividend investor, I mean, that's an 8.5% yield. It's a low CapEx company that has pretty good margins. So if you're looking for a way just to collect premium, collect income, and you're like, okay, I'll get a pop on the stock if they do some M&A, you can collect the dividend until they merge. So these are interesting plays depending on who you are as an investor. I'm trying to make 25%. So for me, this isn't sexy, but if you are a retiree and making 10 or 12% is like a great deal, if you know that they probably don't have much downside, then go ahead. Especially, it looks like there's a pretty good support here down around 30. So something really bad would have to happen for it to get lower. So, you take a look at that with the screener. You go through these, go back and can look at some other ones. Stocks with a chance of getting into the IWM. So this is one that we're going to look at soon. Travel Zoo is one of them. I think they got included last year. So I'll have to go through this and see which ones are going to get on the IWM this year, but there's probably 2 or 3 pretty good trades. Graham Corporation is interesting. It's a good company, defense. I don't know if they're on the index yet, but you go through these and you can find some interesting ideas. So I do think you should have Seeking Alpha Premium. I think once you learn how to use it, it is an amazing shortcut. You combine that with the research you get at your brokerage and what we're doing for you. That's probably all you need in addition to just reading the corporate documents. All right, what's going on in the world? Liquidity, liquidity, liquidity. That's been my theme for a long time now. So this is the chat room over at Fundamental Trends. This is the free room too, I think. This is Investment Trends Library. This is some of the free stuff that really should have been in the stock and ETF trends, Mr. Shooter. But you're getting it for free today. So these are some of the charts that we have, and we try to share them. So come on by. These are some questions I'm going to answer. So what do we know about financial conditions in the United States? They were getting easier and easier and easier through October, and then they cut interest rates, and what happened? Financial conditions got tighter, especially after Trump won. So we have financial conditions getting tighter in the system rather than looser, and that is potentially bad, bad, bad. And we know that as global M2 goes down, asset prices go down. This is a chart that's been on the internet all week for Bitcoin and global M2. Almost a perfect correlation, lagged by about 6 months. Global liquidity has been falling since about October, and we would expect Bitcoin to come down. And this says that, presuming liquidity doesn't tighten up too much more, you could see a correction on Bitcoin to around 70 something thousand. Interesting, the chart I'm about to show you. Here is Shooter's chart, and it's a little hard to read. And we're still working on trying to make these easier to read. But our range, or his range, basically coincides with what the liquidity is saying. So the technical analysis is recognizing here what I think the fundamental analysis is showing. So I trimmed my Bitcoin very recently, not on the idea that I think it's going to go to zero or it's going to get really destroyed, but I manage other people's money, and I have to take a gain here and there, and then I have to try to finesse my way back in if I want it long term. So when I get into this green box, I'll start scaling in. I'll scale in at the top, I'll scale it in the middle, and then I'll back up the truck if it gets to the bottom, or it reverses. What would make it reverse? More interest rate cuts, ending quantitative tightening. I don't think those things are going to happen soon. I think they're going to wait for conditions to get tighter and for valuations to come back. We know that valuations are high. We know that the Fed doesn't like that. So this one is the dollar, and the dollar is super strong right now. If it stays strong, that's almost a guarantee for a stock market correction. The dollar being strong is almost perfectly correlated with a stock market correction. Again, long and variable lags up to 6 to 12 months. But if the dollar stays strong because of Trump tariffs and whatever else, then that's going to put pressure on asset prices. You guys all understand the relationship between the dollar and asset prices. A strong dollar pushes asset prices down because it buys more, and vice versa. So here's SPY. Correction can come all the way down in here. Again, not end of the world stuff, not 2020, but maybe halfway back, give or take. So we have some areas to buy here. And again, I'm not projecting the end of the world just yet. I think that's coming down the road. I think we have another financial crisis 5, 6, 7 years out, and I have a hint for you on that one. I think it's more likely to be 2030 and 2031 than 29 or 28, and there's a reason for that. But if you get a correction down to here on this trend line or around this trend line, it's a buy. And you have to prepare yourself psychologically, because everybody's going to be panicking. Oh my God, I should sell. No, you should be trimming right now. I've been telling you for the 3 months. Trim. Sell covered calls. When it gets down here, don't ask me if you should sell now. I'm about ready to buy down there. Unless it's the end of the world, which I don't think it will be. I don't think we're going to get the Armageddon zombie apocalypse this year or next year. If we do, well, then we wait it out. Same sort of thing for QQQ. This one's IWM. I never, ever buy IWM. I will use it to short the market, but I never, ever, ever long IWM. Why is that? It's a shitty index. You have over half of the companies are not profitable. It's a bad index. Now, you can cherry pick out of those 2,000 companies the good ones, but you don't want to own the basket. Which one am I looking at? Oh, here's energy. Somebody asked about energy, so I'm going to answer the energy question first. I think that the demand for energy is so high and going up so fast that it is unlikely that you see any major disruptions in energy prices. Now, does that mean we can't get a correction? We can, because of liquidity in the market. And if we do get a correction in XLE or PXE or any of the energy names, that just makes them every bit more a buy, because energy demand, maybe right now, but probably soon. If you take a look at Europe, you can make the argument for right now, demand is going to exceed supply. So we're really close. You know, we have a pretty balanced market right now, but new production is not coming on fast enough to offset the growth in demand for energy. So any correction in energy, I think, is buyable. And going back to the point about the millennials, I think that they'll buy it. I think the millennials will ride that trade, especially if they can buy it on a correction. This is Australia. Australia typically does very well. Probably going to break out here at some point. This chart only goes back to 2018, but it's very rare that Australia gets beat up, right? They're feeding Southeast Asia energy and commodities, so, and food. So I think that there's a possibility that in certain accounts I might want Australia. And then the big growth one is India, which has been trending up for a while. Is probably gonna break out. So I like all these markets. I like Vietnam. If I could figure out a low risk way to invest in Africa, I would. I haven't found one yet. I do like Latin America. The Brazil crisis is going to give us a heck of a buying opportunity, and it's coming pretty quick. So we need to be aware that liquidity is really driving the stock market. Let me take a look here. Total market cap divided by M2 money supply globally. We're the second highest point in history. This is .com crash. We're almost at that high of a valuation against money supply now. So one of two things has to happen. Either money supply has to go up dramatically to bring this ratio down, or the price of the assets have to go down. It's one or the other, or both. I think it's probably both. I think you probably see asset prices come down, and then they'll start printing money again, which they haven't been. I mean, remember, we've had 2 years where global money supply hasn't really done a whole lot. This is U.S. total market cap. Not the chart I was looking for. One moment, please. That's the one I was looking for. All right. So what you can see here, this is the 4 major central banks: Europe, Japan, United States, and China. And you've seen M2 has been coming down for a while, right? Big spike up because of COVID, and then it's been coming down. It just started to turn back up, adjusted for the exchange rates with the dollar being strong, but nominally it's gone down. That's the orange line. If the orange line keeps coming down and pulls the green line down, that's a recipe for a very large correction. I don't think that's what's going to happen. I think there might be a quarter where it starts to happen and the markets have a headache, but I don't think that the central bankers push us into a deep recession. I really just don't see, unless they are overtly political in some way and they forget that they're professionals, I don't think that they'll do that. We'll see. Now, I think it's a mistake if Jerome Powell doesn't lower interest rates in a few weeks, and I think he's going to make that mistake. I have told you that there are not a lot of new construction starts. If you get daily chart book, you can look at the charts over and over again. You know that real estate starts are low right now. You have a lot of things finishing in the last few months and the next few months, but 2024 didn't see a lot of starts. So everything that's finishing now started in 23. If we don't get housing starts, multifamily starts, and new home construction really kicking in by spring, we're going to lose another year, and then there'll be a hole in the market. It'll cause unemployment to go up, and we'll probably get a recession. And if that recession is coupled with tariffs and broken supply chains, we'll get inflation too. So there is a potential for a stagflationary environment over the next year or two. I don't think it's a serious risk. I think it'll be minimal if it happens, and I think it'll be short-lived. But you need to be aware that it can happen, and that you don't want to jump the gun on buying if it's happening, right? If you can tell the things are going to get better because they're cutting rates, then it's okay, and ending quantitative tightening. But if they're not doing those things, if they're not lowering rates fast enough, if they're not getting rid of quantitative tightening, if they let the system get illiquid, then the spiral down can be fast and painful. And we would want to stay on the sideline. We're not going to try to catch that falling knife. Again, that's not my base case, but we should be aware of it. All right, let me bring Shooter and Teresa in here. I think I've asked you both to unmute. There you go. Teresa?
Hey, Kirk.
Why don't you tell everybody how Italy was?
Oh, Italy was wonderful. We spent a week there, or anyway, something like that. Got to see we were in northern Italy. Got to see the Alps, went up to a ski resort, saw some snow. But the best part was we went to the seaside. So I got to put my hand in the Mediterranean, which I really love, and just enjoyed ourselves. It was a great time. Flights were seamless, never had a delay on flight. Everything went when it was supposed to go. We were back in steerage, so we were at our knees up in our noses, but it was great. We had a really great time.
Did you take a train while you were over there?
No, my daughter has a car, so we were ferried around and treated like royalty. I love going on trains. Trains are fun.
All right.
Yeah.
As you know, we're going to Paris to get married, and then I got other trips coming up. So I want to do a lot of Europe the next decade. One thing I would point out to folks is, the dollar is strong against every currency right now. I think the dollar is going to be strong against Europe maybe forever. I just don't have much of a bull case that I can come up with on Europe. And I've been bearish on Europe since college, so I've been right a long time. I think that's probably going to last forever. To me, Europe just chops along. They muddle through. They never do anything exciting. They never have anything horrible happen, hopefully. But the dollar should be strong against Europe for a long time. The UK maybe has a catch-up period, but I don't see the rest of Europe ever being expensive for us to travel to. So go to Europe. Did you have pizza? I'm guessing you had pizza.
Oh yeah, we had pizza. We had pizza 3 times, I think. We had a lot of pizza, and it was good.
Okay.
Italy makes good pizza, as we know.
Okay. How does it compare? For those of us who haven't been there.
To me, it's like a homemade pizza, and you get a big, huge thing. It's like you get a whole big pizza, and then you tuck into it and eat the whole blooming thing. Everybody gets their own pizza. It's different.
That's awesome. I have some charts up here, and I don't have one of yours right now. But as far as the S&P 500 goes, what are you thinking when you take a look at your charts? I mean, Shooter has this range up here. It's looking like we're going to get a correction. Liquidity would indicate that we are. Are you seeing the same things in your supply and demand zones?
I am, but it has not broken down yet. So it's still maintaining. It's maintaining the trend. RSI is high, but it has not broken down. But the potential's there, and when it goes, it's going to go. But right now, it's going to return to trend, unless it breaks down further than that.
Okay, Shooter. I mean, I see your target range here. What do you have to say about that?
I think we're going to continue to push. If you look at the history of our retraces since October 2022, excuse me, everything has been shallow, and the few dips that we've gotten have all been bought. We're still seeing the buyers come in. I mean, they're just not coming into the extent. The order volume is not as high. And, really this year, we did not see the push, this last week. Which we usually do. You usually see quite a little bit of fund buyers, but we weren't seeing a lot of blocks and splits. So, my bias here is that we pull back a little bit, only because we're not getting enough of a push to get out from these flats. But I think we continue to push maybe up towards 640 in that range. And then we break down is where my thinking is at this point, because we should have come off much deeper than we have if we were going to come off with this.
So you said back in October, maybe it was October or November, you said it looked like it was going to play out to the upside until spring. Yeah, I think you may have said April. Does it still look that way to you?
Seasonality suggests the 3rd week of April if we come off.
Yeah, I would agree with that. And one of the things that people don't think about, they just think seasonal, but they don't ask why.
Yeah.
Well, retirement plans get a lot of money in them from December to April. till April 15th. So, which is the end of the second week of April. The third week is usually when you see the sell-off because the inflows stop. So we have about a 16 to 18 week period where retirement plans from the second week of December to the second week, so I guess about 16 weeks, second week of December, second pay period, right? The pay period, to the second week of April, which is April 15th is the cutoff for IRA contributions and employer matching. Although most employer matching is done by March 15th. So you have all that retirement plan, the matching and people trying to get their retirement plan contributions in during that 4-month window. And that's what explains most of the seasonality. It's been that way the entire time I've been in the business, to the 1990s. And it's become more pronounced as more and more and more people are in 401ks. And because employment is good right now, there's a lot of money going in.
Well, they're in the indexes too. We don't want to forget how significant that is as far as the indexing, because each year that has grown. And I would suspect that we do the same thing in 2025. But one thing we're also starting to see a little bit, which might be sort of offsetting the liquidity issue, is really the decline going on in China as far as values. Basically, they're in a free-for-all, as far as price value. So one of the things I'm looking at is specific names to get short coming out of China, because I think this continues until they get very aggressive in QE. And that doesn't look like that's going to happen anytime soon on the table. But that will also, I think, create a little flight to safety from the Asian markets back into U.S. treasuries and the indexes. So when we do come off, I think potentially after that April window, I think that gives us a little more elevation where we potentially could see some upside from that, depending on how significant that flight is.
Right. I agree. I agree with you. One thing that I would point out on the macro side is at the end of 2021, I was telling everybody, look, we're going to get a correction in 2022, kind of a mini bear market. It's exactly what we got. And I said that one of the reasons was the Federal Reserve did not want to see the market become more overvalued than it was at that point. And I think that now that we've had a 2-year rally and we've gotten to the point where total market cap divided by M2 money supply is second highest in history, which goes along with the Buffett indicator being at the highest in history, and most of those valuation indexes I show being highest or second highest in history. We're going to get a correction. Now, do we have another puff on the cigar left? Maybe. Might even be 2 puffs on the cigar left. Hard to know. But I've been encouraging folks to trim, to upgrade your portfolio, focus on your very best ideas, the stuff that you've been waiting on, and maybe it came up a little bit. Take this as your opportunity to be done with it, because you just need to get rid of the bad quality. You need to get rid of the things that haven't performed for business reasons and don't have catalysts line up. Now, a lot of the small caps have catalysts line up. You just have to live with that. But your large cap stocks, your S&P 500 stocks that are plotting, you need to get rid of the vast majority of them. So I'm afraid of a lot. I was going through the S&P 500 stocks, all of them. And I'm back to thinking that 200 of them are dangerous. So, that got down to about 100 of them being dangerous down here. But now we're back up to 200 of them being dangerous. So when I say dangerous, I mean they could lose 30 to 50%. I think Tesla can lose 30 to 50% in the next year or two. So, and that's a big market cap stock. I don't think Microsoft, Amazon, Alphabet, Nvidia have 30 to 50% risk, but 10 to 20% for sure. Maybe 30%, if you take a look at where they are. But, I just don't see a lot of the fire investors wholesaling, selling their SPY holdings, right? Because they've made it into a religion.
Let's just be honest. Where the indexer is going to go outside of the Mag 7. I mean,
but they don't even know that that's really what they're doing. So, I think that a lot of if they knew that's what they were doing, they'd buy QQQ instead, right? So they somehow don't recognize what they're doing. They just say, John Bogle said that this is the right way to do things. And the reality is that, yeah, it works in a bull market that you can make 10%, but if your goal is to make 15 or 20 or 25, it's a bad idea. And let's suppose that we have an illiquid period followed by a deregulation rally, followed by a boomer crisis, followed by massive QE. Well, that might take 7 or 8 years, and we might end up only a little bit higher at the end of it. Maybe we get to 10,000 8 years out and on the S&P, and we're at 6,000 now. You back out that return, it's low to middle single digits, and it's just not that great of a return, especially if there's big QE that causes inflation again, which could happen. So I think that it's prudent to try to trim at the top quarter and buy in the bottom quarter, or quintiles. I like thinking more in quintiles, the 4 out of 5 thing, right? But if we can sell in the top fifth of the market and buy in the bottom fifth of the market, and then just ride the trend up in the middle 3, that's a pretty good idea. I mentioned earlier that I've been looking at this from a macro standpoint, and I think that we are likely to get a small correction now, and then in 5 years, the shit really hits the fan for a couple of years. Why do I say that? You may remember from the news that the Republican congressmen, and they're wrong, but they made it a political point anyway, is they were ripping on Janet Yellen for not writing longer-term debt. Well, the interest rate on the short-term debt and the long-term debt was about the same. So you're always going to do the shorter-term debt if you think the interest rates are going down. And that's what she thinks. And I agree with her. At some point, we have to bail out the boomers' retirement, and that's going to require interest rates maybe not to get back down to 0, but for sure to get much lower than they are today. And that's when you do longer-term debt, to the extent that the market will support it. Remember, there still has to be buyers, and that's something we ran into during COVID. Everybody said, well, write longer-term debt. Nobody was buying it. You can't sell it if ain't nobody to buy it, right? So I think there are creative solutions coming up when it comes to Social Security and the next big QE and how everything's structured. And one of the structural things is this. Scott Bessent, the incoming U.S. Treasury Secretary, I think he's going to write 5-year debt instead of 2-year debt. Janet Yellen wrote a lot of 2-year debt, and that's what's due this year and next year. I think Bessent's going to, and we can watch, we'll find out. I think Bessent over the next 2 years is going to stretch that debt out over the next 5 years. He might even write a little bit of 10-year debt. I don't think he's going to write much 20-year debt. If he does, he's dumb because the interest rate's too high. You can get a point or two lower if you wait until the next recession to do it. But I think that the bulk of the debt will be 5-year debt that is consistent with history, that is consistent with what the market will support for buyers, right? There'll be buyers for that. So if the wall of debt that we're getting today comes due in 5 and 6 years, right? If the debt from 25 and 26 gets pushed out to 26, 27, 28, 29, 30, and 31, which coincides with peak boomer retirement, that's probably when the boomer retirement crisis happens, absent of any other things that go on between now and then. So they can push all this debt out 5 years to the next president, who will have to look like a jerk. Right? He'll get whoever the next he or she, whoever the next president is, gets the blame for that, right? So I think there's a way for Trump to finesse his way through a lot of stuff, but ultimately we know that there are multiple things coming around 2030 that are going to have to be dealt with. So I think that if I had to game this out like a gambler, and I had to try to figure out where I was going to make money, it would be get back in the stocks soon, on a correction, because you're probably going to get a rally based on deregulation and falling interest rates and the end of quantitative tightening. Eventually that overheats, and you want to get out of the way of that whenever that happens, because going into 2030 and 2031, there's going to be another wall of debt, peak boomer retirement, and high valuations again. So the one nice thing about bubbles is that if you can get in near the bottom and get out near the top, you can make a lot of money, right? Big time traders always talk about, they like bubbles because they ride them up and then they evacuate before the crowd. Well, we're going to have to evacuate before the crowd. Now, I think we're getting out of the way of a small bear market right now, like 2022. However, if the system gets broken for some reason, and I don't really know how to handicap Trump. I mean, I've tried to figure him out, and I haven't done a good job of it because he doesn't want anybody to do a good job of it. People say, he's just negotiating. Well, if you take a look at 2017 to 2020, you did a lot of things that were bad for supply chains. And then when there was a shock, it really hit us hard because it required big bailouts, even though, maybe they didn't have to be as big as they were. And again, we've talked about the mitigating factors that maybe they were pre-bailing out the next thing. I don't know if they're that smart. I think they are, but who knows? What I'm trying to get across to you is that there's a lot of moving parts. This is not as easy as investing 2 years ago. 2 years ago, it was buy everything. Today, you got to be really selective. I think you need some dry powder because I think the uncertainty, which the market hates, probably leads to a good correction. Not a Armageddon zombie apocalypse, not yet, but we're going to get a correction. And I do believe that there will be big technological productivity gains. I do. I think it's going to take a little bit longer. You heard the CEO of NVIDIA today say something I've been telling. You've all asked me about quantum stocks now, 10 times? Every meeting for the last 10 webinars, you've asked me about quantum stocks. So what did I tell you? I said, we are not going to have good quantum computers for a decade or more. What did the CEO of NVIDIA say today? 15 years, right? Somebody asked me about drones. I said, I don't know which company's going to win, and I don't know how fast it's going to happen. So we're in the front end of a hype cycle. Let it crash. Let's find out who survives and then buy them when nobody cares, right? So stop chasing.
It's too infant.
Everything's too infant if it's new.
Yep.
Don't chase the first hype cycle unless you legitimately were in early because you knew, right? Sometimes you knew. We knew about Bitcoin, right? I've been telling you for years now. It took me a long time to get on the Bitcoin train. But once I figured it out, it was time to ride. So I want you to all think second and third level. You must stop being chasers. You are 80% likely to lose when you do that, unless you are a technical trading savant. And Teresa is a top 10% trader. Shooter is a top 10% trader. When I put the time into it, I'm a top 10% trader, but I like doing other things. So I'm just telling you, don't chase. If you think like a chaser, you think I'm going to make all these trades, then you better be able to write down on paper in a trading journal how you did it. I had this plan with this indicator. This is why this was going to happen, right? You better be able to do that because all the great traders do. All the great traders keep track of what they're doing and they have reasons for what they're doing. Now, I Shooter and Teresa, I don't know if you have actual journals, but I see you do it with your charts. That's fine. For those of you who have a trader mentality, you better be able to justify it. Because if you can't, you're going to get creamed. That's a word from 8th grade. So
they call it steamrolling.
Yes, you'll get steamrolled. And it's because you're up against the Teresas and the Shooters and the me's of the world, even though I don't do it much, and the supercomputers and the hedge fund guys and the good hedge fund guys and the private equity guys and the retired prop traders. Right, the retired prop traders, right? Guys that are retired at 50 because they're rich, and now they just trade their 8-figure book for funsies on Friday morning. So yeah, right. They trade their book in the morning, then they go golfing. That's what they do. So unless you're in Florida, then you go fish.
No,
or maybe
Tuesday,
you go fish.
Wednesday, Thursday. They golf Friday and golf on Monday. Because the back nine is not enough.
If you're in Florida with a boat, you fish in the morning, then you trade, and then you make your fish, right?
Nobody from Florida fishes.
All right, hey, I got a couple questions. Reconciliation bill that Trump is asking for. They're saying they're not going to vote on it till spring. Yes, that is true. And what you are starting to see is exactly what I was saying for the last few months, is there are not enough votes to put through a radical bill. They're going to get rid of some things, right? They're going to get their little wins in. But you already have the 5 senators who are saying change SALT or we're not voting for it. You're going to get House of Representatives and senators from the states that get IRA money, right? Inflation Reduction Act money. They're going to say, gore his ox, don't gore my ox, right? So, you're just not going to see anything that's too off the charts. What you can count on is this. They're probably going to give more tax deductions to the coast, right? Salt's going to go up. They're going to extend everything else, right? And they're not really going to cut spending. There's just nothing to cut. A couple $100 billion if they have the gumption to do some smart things with technology and let employees leave by attrition and then reposition other people, they can do some neat things. The only big thing that I can see that they can change that would legitimately save $1 trillion over a decade would be merging Medicaid into Medicare and making Trump care Medicare for all based on the way Medicare is, not free healthcare, right? Because any of you who are on Medicare know it ain't free, and you have to buy a supplement. If you merge the two programs, you achieve a lot of things without killing private healthcare and the ability to innovate, right? And the ability, if you're rich, to buy more than the next guy. So I don't know if they'll do that. Honestly, I think Trump might. When you play poker and you get dealt like a 4 or 5 of clubs and you don't have a lot of chips and you're like, I got to gamble soon, otherwise I'm just going to blind my way out. And I'm using this particular hand because I did it last night. You play, somebody raises and you call with a 4 or 5 of clubs, and then somebody else calls, and now you got really good odds on your money, even though you're probably only 27% to win. And then a 4 hits the board, and then another 4 hits the board, and you win the hand. I think Trump might think about it like that. He might think, well, I'm Donald Trump, and I got to do something to change the name of the healthcare system from Obamacare to Trump care. How can I do that? How can I do that?
He wants a legacy.
Well, exactly. Most second-term presidents govern to a legacy, not the rhetoric. Now, I will say the last few weeks have had me questioning that because there's been a lot of rhetoric. However, there is a possibility. I'm not saying that it's a pair of aces. I'm saying it's a 4 or 5. But 4 or 5 wins once in a while. I think Trump might merge Medicaid and Medicare. And I say that because I have sent my letter, and there's thousands of people doing it, to the think tank people that I know through the University of Chicago. And there are other people out there that are saying the same thing that I'm saying. If we really want to save a lot of money, merge Medicaid into Medicare, let people buy supplements on the exchange or get them through their employer, and the insurance companies are good then. Private healthcare is still supported. You have universal care. You get rid of all the ER visits. You get rid of of all the systems in America, Medicaid is the only one that's really inefficient. Everything else is pretty efficient. People can say it's not, but they're wrong. I mean, there's only a couple percent. And what the government wastes in inefficiency isn't really any more than, is probably way less than what executives skim out of companies. So, everything is a matter of scale. All right, a couple other questions. Somebody asked about Brazil. I already told you about that. I think that Brazil is a great investment. I don't buy the individual companies because they're too hard for me to get good information on, but I do pretty well with the indexes off of corrections. So ILF and Shooter, what's the ETF for Brazil? EWZ?
Yeah, EW Brazil.
I think it's EWZ. Whatever the Brazil one is, if you want to invest in that. I like ILF. It's pretty highly correlated, but then you get 20 or 30% of the rest of South America. Somebody says, what percentage of your portfolio for IEI? Anywhere from 5 to 15%, depending on what your risk tolerance is. And it's really just a place you'll invest your cash first, and then you'll invest IEI in the stocks. Somebody mentioned TLT. I've been telling you all along that TLT was the wrong investment. It's been going down. TLT is recession insurance, and until interest rates stop going up on the long end, you don't want it. Now, we are getting close, right? Shooter's got charts out there. I got charts out there. At around 80-ish on TLT, that would correspond to an interest rate a little over 5. Probably it's time to buy that thing. I don't think it can get much lower than 80, maybe 77, 76, but low 80s is probably where you buy TLT. If you already have it, you made a mistake. Just live with it. It's no point selling it now. You're just gonna have to ride through it. How expensive is buying Greenland? Did you watch Lord of the Rings? Yeah, it's Mordor expensive. Okay. All right. Let's see. Any thoughts on the recent hype of Fannie Mae? you know what? There's about 8 of you who I bought that in your account and then I sold it. I bought Fannie Mae and Freddie Mac over the summer and then I dumped them. Oh well, my fault. I mean, made a small profit, but I didn't feel comfortable owning those because I'm regulated. I don't think they're worth buying now. They're already up 400% or whatever it is. What are they? Have they quadrupled since freaking August? Something like that. I mean, there's no point in buying them now. But I actually think that the likelihood is that Fannie Mae and Freddie Mac do not get privatized. I don't think that legally it can get through the system fast enough before somebody breaks it. Maybe it happens, but I don't think so. I think it's more likely that they're dissolved and that FHA absorbs a lot of that debt.
Still hold those MBSs too. They got to clear that off before they can go private.
Right. Well, there's I think it's $8 trillion of liabilities with Freddie Mac and Fannie Mae, unless there's a consortium that wants to buy all that debt and all those mortgages. Here's the thing: as a citizen, do you really want the private equity industry owning the mortgage on your house? You're out of your mind if you do. You're out of your mind if you want private equity holding.
Oh, look what has happened to single family rentals at this point.
Right. I mean, we already have private equity buying up individual houses. They should be kicked out. I'm telling you, I think, and there's papers out there that support this. I think that the biggest pressure on inflation right now is that single family homes are now 7 or 8% owned by investors. And I don't mean like the guy down the street that has 5 rentals. I mean big private equity firms, $500 billion entities, multiples of them, Blackstone and Apollo and KKR and all the little guys that try to copy them. And there's a REIT out there that buys single family homes. They're buying these single family homes. They jack up the rent. They never sell these. They don't get back onto the market. And that is why housing is so inflationary. So it should be illegal, in my opinion. It used to be. And I think it will be again someday. And at that point, it's probably you probably do see very deflationary real estate for a half a generation at some point, but that'll just be bringing it back to equilibrium. So we'll see. I mean, we're going to have so many people moving here because of climate change that we'll need more houses anyway. So we'll see how it goes. Let's see. Any other questions? Any thoughts on? There's one industrial REIT. Somebody asked about how our industrial REIT's looking. There's one industrial REIT that's all right. I like Stag at this price. I don't really know if there's anything else that I really love. But Stag, I like that they upgrade the properties. That's always been the differentiator to me. They buy class 2 and they bump up to class 1, B to A, whatever they call it. Somebody says I have some employee Microsoft stock. It's been less than 12 months. Should I sell it? Oh, because of the capital gain, you'll have to pay regular taxes. I wouldn't trade one of the grandpa stocks, right? I call Microsoft, the 3 cloud companies, Microsoft, Amazon, and Google, to me are grandpa stocks. They correct, but they never go to zero. They always come back strong. They have all sorts of things that they can spin off if they need to. So I don't know that you need to sell Microsoft. I wouldn't be buying it right now, but I don't think you need to sell it. It's not a good one to trade, in my opinion, especially if it's going to generate taxes. So here's a good question. Somebody asks, do I expect Bitcoin to follow the same trend as the S&P 500? More or less. So Bitcoin is a risk asset, just like any commodity, and the S&P 500 is full of them, right? So risk assets in general follow liquidity. For all the people that argue that Bitcoin is a store of value and a unit of exchange at this point, it's not. It's a commodity. It is digital gold. So when there's less money in the system, gold, stocks, copper, everything goes down. So you just have to decide, okay, am I going to buy into the maximalist theory that we're all going to buy our pizza with Bitcoin someday? Or do I just know that nation states and companies are putting it on their balance sheet and rich people are using it as a get out of Dodge currency? Is it out there as a way of substituting for gold? And that is what it is. Because gold, you can't move those gold bars around very easily. And gold really only has value because we say it has value. It doesn't really do anything industrial. It's pretty, makes jewelry, But if you said, hey, I need some gold, I'd say, for what? What are you going to do? You going to plant it? You going to build a house out of it? Maybe a toilet, right? So there's just not much you can do. Any currency is backed by a government, but what is the government backed by? The government is backed by the productive power of the economy, right? That's what it's backed by. What can that economy do? That's why the dollar is so strong. Our economy is that good. Bitcoin is backed by the economic capacity of the people who own it. And a lot of the people who own it, OPEC, China, Russia, United States is the biggest holder, have big economic productive capacity. And now that we've normalized it through ETFs in the financial system all over the world, it is taking on all the characteristics of digital gold. Thus, it should move in a similar fashion, but it's an immature asset because it's not widely held yet. Thus, it will grow to the point, to the size proportion in the system that it needs to grow to fulfill the mission of digital gold, which is 15 trillion at a minimum, probably 20 to 30 trillion, maybe a bit more. I think that the market cap of Bitcoin eventually is north of 15 trillion. I don't think it gets to 100 trillion because just the value of all the assets on Earth don't justify that. But a high single-digit percentage of the value of all assets on Earth, which would put it somewhere in that 15 to 30 trillion range, probably closer to 30 trillion, makes a lot of sense because then you can use it to settle major transactions like moving energy or food or water at some point, I think, or other assets, right? They can use Bitcoin as a form of international settlement or for cross-border transactions that don't want to have to deal with exchange rates. And those types of transactions aren't pizza. They're a ship full of containers. They are a barge full of oil. They are what do you call the ships that carry the grain? Freighter of grain. Right? Right. So that's what it'll get used for. And we already know that they've done it with oil already. They've made part of the settlement for oil with Bitcoin. I think to prove that they can do it. Because I don't know if maybe Saudi Arabia won. I think it was Qatar actually. They're kind of the rebel in that group. I think it was Qatar that took a little bit of Bitcoin as settlement. They took some euro, some dollar, some yuan, some Bitcoin. I think that's what it was. I'd have to look it up again. It's all rumor and mystery, right? It's people that did forensic accounting and nobody cops to it. But when the forensic accountants say this is what it looks like, it's probably what it was. All right. Any other questions? What do we think of Sedge, Solar Edge? What do I think of Solar Edge? I think that the Israeli stocks in general are beat the heck. And I think that we should pay attention to some of these Israeli stocks. So Shooter and Teresa, find us some Israeli stocks. I think Solar Edge is probably worthwhile at some point. I think that this rally is a rebound rally. I think maybe the next pullback we should be looking at it. Enovix is a half position, and I have puts sold on it. If they get put to me, it would be a full position. At this moment, it does not look like they'll be put to me because the stock went up 20% the other day. So I'm trying to get it to be a full position, but I need a pullback. Are we going to update? Yes, I am updating the VSL. See, right here, working on it. Next couple of weeks, you'll get a chance to sign up for the new VSL with all the updated values. XRP, Ripple. Funny story about Ripple, since we're on funny stories. I was sitting at a campfire about 4 years ago and somebody talked about Ripple, so I've always kind of paid attention to it. All the cryptos, and I don't know how to do the math on this, so maybe just being a technical trader is the way to go. Understand this about all the cryptos. Their value is derived from what they make on the transactions they conduct. Makes sense? It's going to be just like a company. How do they make their money and how much of it do they make? I don't know how much is going to get done in XRP. That's how you got to figure it out. Now, since nobody knows that answer, it's all speculation. And I think you just listen to Shooter on this stuff because he'll say, it looks like it's going to run to here about, and then it's going to fall back. And it's going to run to here and it's going to do that. Because I don't think anybody's smart enough to know how much Ripple is going to generate in profit, in money, in fees. What do you think about that, Shooter?
It's really an adoption thesis. They just signed a deal with Bank of America.
That was 4 years ago.
No, well, I mean, actually, no, that was just a trial run. This is actually a deal for cross-border transactions.
Okay.
Yeah, so they're actually going to start moving those cross-border transactions that occur with Bank of America but they're going to be using the Ripple network to complete those transactions. So that's a big plus.
Okay.
But XRP, anywhere between 350 and $10 by January 2026. It just really depends on how much that adoption thesis comes into play with the banking sector, because right now Link is not even close to them on the agreements, and the trust level before those banks will surrender dollars for those cross-border transactions is very difficult. I mean, it's not just where anybody's going to be able to do it. And that competition, it doesn't really exist. The only one that has a likelihood to come in there is Link, and they're running into too many technical issues on the security side that the banking regulators don't like.
Okay. One thing, I guess two things. One, it was August of 2021 that somebody at that campfire in New Hampshire told me, take a look at Ripple because Bank of America is helping develop it. So, or funding it or whatever the deal was. Second, for people who doubt that this is coming, that blockchains are going to largely integrate with or replace software as a service, take a look at California. They just put all of their car titles on a blockchain. Now, they haven't disclosed how much they paid to do it, but the answer is not much. So there's your canary in the coal mine is, what are these cryptocurrencies going to be worth? I don't know how much, because remember I told you that I bought an AI 4 years ago for 20 grand, and now I get something about as good for 200 a year, and I can get like way better than what I had for 2,400 a year.
We're going to continue to see that.
Yeah, the blockchain is going to bring the profitability for software as a service companies down a ton. You're going to see Salesforce and some of these other software as a service companies just get massacred. Now, the survivors will come out stronger, but I'm listening to millennials on X tell me how software is the trade of the year, and I'm trying to tell them, aren't you guys blockchain savvy? How can you think that software as a service is the trade of the year? You know, it's been the trade of the century so far, right? So you're a little late to the game, bro. You know, my ex bro, my millennial bro, trader bro, investment bro. You know, I mean, these guys, I tell you, they're
faster with AI as well. So look at how quick OpenAI came onto the market. And there was no competition. And how fast did we have nearly $1 trillion market cap chasing him?
Right. And we've seen that in a couple things. Satellite technology, I thought was going to be a monopoly, and it's not. For 3 years. Also, there's 10 competitors, you know? So, you know, you take a look at how fast technology is moving, and now the technology can build technology, and the technology is going to keep building technology. And 15 years or 20 years from now, we're going to have quantum technology. Yeah, learn how to cook something good, man, because I think that restaurants really going to need a lot of people.
Yeah, I'd like a good Italian pizza right now.
Yeah. You better have taken a class, Teresa, on how to make those things. But
yeah, that's coming.
Okay, all right. I think that the point I was making about blockchain is that it is a major disruptor to software as a service. So you better keep that in mind, and you better know which companies are getting into it knee deep. And that is Accenture, Oracle, but then the entire financial industry. The energy industry is keeping track of oil with blockchain now. I mean, and you're not hearing about the expenses. All you're seeing is the profit margins go up of the companies using this new technology. The technology companies, I don't think, are where the big money is. I think it's the technology users, at least for a while. So we'll see. Somebody asked about rare earths. I like MP Materials. I do not like REMX, the ETF, because I just don't like all the companies, and I'm not so sure I want anything to do with China. But I do like MP Materials because it's a domestic play, and at the moment they're a monopoly. They'll soon be an oligopoly, and the oligopoly will be small, no more than five players probably, and maybe not 5 for a long time. 2 or 3 in the short term. And that's not just the mining, but also the processing. So we're going to be able to get around China's control of that. And that means that I don't want to own the ETF, which owns a bunch of the China stocks. Somebody asks about HRTX. Interesting that I was just reading about HRTX today, and I did put them on the bottom of the list. I haven't actually taken the starter yet, but I will by the time this is published. Stock's about $1.60 right now. the No Pain Act went into effect. They finally signed it, went into effect January 1st. And I think that President Trump is very, very aware of this, and I think he's very in favor of this. I think that we're finally going to get action on opiate addiction. I think it's going to be the combination of stopping the precursors from getting from China to Mexico to over our border. I think it's going to be educating and threatening doctors not to use them unless they have to. And I think that Heron Therapeutics and a couple other companies probably benefit from that. Somebody asked about Pfizer. I think that Pfizer is in great shape. Some of the people who I really respect are starting to load up on Pfizer. So if you're a dividend investor, you should own it for sure. And if you are the type of person who just likes a good total return in an IRA, I think Pfizer is the sort of thing that kicks out that big fat dividend. And there is a chance that it rallies hard at some point. Do you keep it forever? Probably not. But through that position trade of 2, 3, 4 years, 5 years, however long you get it to run, I think there's a big 1, 2, 3, 4, right? I think we haven't started the first wave up of Pfizer. So there's going to be some waves up in Pfizer, and
nice divergence on the weekly.
Yeah, I think Pfizer is going to make a run.
Yeah, I'd say it's a good buy here. Your first target is going to be $31, and 50% back is going to come in right around 42.24. Should be there in 24 months if you measure the cycles.
What is it today? 26, 5?
26.86.
So
just risk your prior low at 25.13.
So in the next few years, it's going to go up 50% or more, and you get a dividend too. And if it catches a meme rally, right? If it becomes the popular thing, it could really take off. And we're going to end with that. I want people to understand that there really aren't buy and hold forever stocks. There's a handful, not many. I mean, maybe a dozen. And everything else is a position trade. Unless you're a gifted swing trader and you're over at Rare. But if you're not a gifted swing trader, you don't have the time for it, you don't want to learn it, the position trading is the way to go. The position trades are you buy at the start of a long trend that the market is eventually going to pile into. And when they finally get their FOMO trade on, then you finally sell it to them at the end. And you get your 1, 2, 3, 4, 5, right? Your 5-wave thing. And that's what you do. You can try to trade the dips, but you don't have to. Right? If you're a swing trader, you will, but if you're not a swing trader, you just ride it. And a stock like Pfizer should double, give or take, over the next cycle. Plus you get the dividend, which adds a whole bunch of total return. And it might catch the imagination of the world, or the millennials, or the institutions, or somebody with a big checkbook, and it might really rally. And if that happens, then you get some extra gravy on your potatoes, right? Or if you're not the savory person, you're a sweet person, you get some extra whipped cream on your pie, or hot fudge on your sundae, whatever it is you like. But you get extra, maybe you just get the regular helping, but maybe you get extra. And that's what you want to put yourself in a position of, is not a lot of downside, pretty reasonable upside on the base expectation, but the possibility to make a bunch more. And some of those will become big winners. And that's what we want. We want a handful of big winners along with our winners and our break evens. And hopefully we avoid losers, which lately we have been. But I've had crappy stocks on track. I always go back to on track because I was like, it was a great idea. And they sucked. And the guy was a crook. Right? I mean, that and was that real estate one that I hated? I loved and then I hated, and then everybody else loved after I hated it. Whatever. Open Door. I don't even know what's going on with Open Door anymore. But I know that after it crashed, it had a big hopium rally, and I don't know if it ever crashed again. Open Door. Oh yeah, look at that. Went up 300% twice, and now it's back down 75%. Serves you right, you're a crappy company. So with bad management, I mean, I told you how bad a couple of years ago, I told you exactly the mistakes the management was making, and they doubled down on making their mistakes. It's like they were the New York Jets. Oh, sorry to somebody. All right. Teresa, any closing thoughts? I know I've rambled mostly.
No, the markets are holding up. That's not to say that they're not going to break down, but they're holding up right now. We'll see it when it happens.
Yeah. Shooter, you have any takeaways? I mean, anything you really want people to think about?
Get your shopping list ready.
Yeah.
And be very specific and detailed on how you're going to enter and at what points, because I think that's going to be very strategic in how well you end the year. Because, I tend to agree with Kirk. I think we're going to have a choppy year. So we don't really want to enter at the wrong point here, which is one of the reasons I was looking at cash secured puts or doing some cash secured puts right off the chute this year, because it was the safest bet when I didn't see a lot of upside. So make sure those lists are details. You have any questions in chat, throw them out there, and I'll be glad to give you my 2 cents on anything.
Hey, Shooter, how many times a month do you and I really talk?
Sometimes not even every month.
Teresa, how many times a month do we really talk?
Yeah, no, not that often. No.
So there's a reason that I don't talk to Shooter and Teresa a lot. I don't want them colored by anything other than I publish. I don't want to try to talk them into anything. They're both great at what they do. So when we all start sounding the same,
yeah,
either we are spot on or we're the Three Stooges. So my guess is that we're probably spot on again. Choppy year, buy the dips, but you should be accumulating some cash over the next few months. And it's better to accumulate a little early than a little late. So sell covered calls, get rid of the positions that haven't worked and that don't look like they're going to work. And be honest about that. Don't be emotional. If you're going to trade out of something for a particular reason and it starts to work again, and maybe you were right, but you got out on a mistake, and right, if just don't have recency bias. Like Heron Therapeutics, I sold it back when it was over 2, and I'm going to buy it back in the middle ones. Why? Because the No Pain Act is effective January 1st. It just went into effect. And I think that, honestly, I think President Trump is going to be tougher on opiates than President Biden was. And President Biden was pretty tough, but took a long time to work things through the system. And now I think that a lot of things are teed up. And ultimately, so long as President Trump manages to a legacy, he's got a lot of things that he can accomplish that other presidents haven't been able to. I mean, if he decides to merge Medicaid into Medicare and just create Medicare for all, but with, we all have skin in the game, it's not free healthcare, right? That's what it's socialism. No, Medicare is not socialism. It's basic universal healthcare that we pay for because it's an efficient way of managing a monopoly. Healthcare is always a monopoly. Why? What's the definition of monopoly? It's not one provider. It's no substitutes.
Here, here.
You can't say I'm gonna never have healthcare because I don't feel like it. But you can say that, but then you die. So healthcare doesn't have substitutes, right? Ford has a substitute. All the other cars. Or I just proved I went 8 months without a car. 8 months without a car. I wanted to see if it could be done. I wanted to see how it felt to not have a vehicle anytime I wanted. And I was spending $200-300 a month on Uber. And to me, I was like, well, I can lease a car for $500 and have it. So I finally busted down and leased a car here a couple of weeks ago, but and I can write it off. But the reality is that things that can be substituted, things that are in highly competitive markets, not usually the greatest investments unless there's something not valued in the business. Your monopoly businesses, Sirius Satellite, are pretty good businesses, right? And if they have other catalysts for taking business from Spotify, suddenly, because Sirius is using AI and they already have the satellites and Pandora's as good as Spotify, why wouldn't people save some money and just move everything to Sirius? Because then they get it, right? That's the argument. And that's why Buffett's buying it. They have a monopoly and they're going to capture part of the other pie and the advertising revenue. Think about things at multiple levels. Is there really competition? If there is there something not valued? If there's not competition and there's monopoly pricing power, how do you correct for it? In healthcare, it's probably Medicare for all. But otherwise, it's universal or United Healthcare to the moon, which we already got. So think about the levels at the economic reality level, right? Think about economic reality, because you can find the economic value in a business by thinking about, okay, if I wanted to compete with them, how would I do it? And if the answer is, I don't know how, I just don't think there's a way to do it, then they probably have pretty good pricing power. But if you can say, well, I would do this, this, and this, and bam, I'm a competitor, they probably don't have pricing power. So where are their substitutes? Where is their competition? Think about your companies that way. Don't think, Chase, all the quantum stocks are up 700%. I should buy them right now. And then they drop 50% in a day, right? Think about that. Time frames matter. Valuations matter sometimes. Valuations really matter when liquidity is coming down, because then multiples contract instead of expand. All right, we'll catch you next month. Hour and a half. I feel pretty good about that, actually. And Mondays, retirement income options every Monday. I will be pre-recording stocks of the week, or Kirk stocks, whatever I call it on YouTube, when I have time. But I will try to get a stocks of the week out every week. It just will be when I have time. So when you see the article, the video will follow. Maybe before I submit the article, I'll do a video and then I'll put it in the article too. Should I do that? Good. Quick poll. Yeah.
Good idea.
Yeah. Good idea. All right. Everybody have a great night. See you
Peace
next
out.
month. Yeah. Retirement income options on Mondays.
Bye all.
Thanks for having us.